Well, this has been a soft quarter for the Tyre company CEAT, wherein we see that the company witnessed really good growth in the YOY comparison because of the small base of the last year. But comparing it on the sequential basis to have a more realistic view, the revenues of the company declined almost 17% on a Q-on-Q comparison, with the profit figure at 20 crores. The EBITDA was down from 255.3 crores reported Q4 of FY21, and this time was at 165.7 crores. Along with this was the third consecutive quarter where the margins of the company declined, and this time the margins were at just 8.7%. We see that the company, due to the commodity price inflation, the margins of the company are taking a hit, but along with that, the company has been trying to partially offset the impact of this with the price hike taking, but due to more competition, they are not able to pass on all of the price hike that's needed to the customers, and they still have to come up with their operations, taking a hit on the margins. But going ahead, the company makes its intentions clear that they will be taking the price hike due to the commodity price inflation. As of now, on the current demand trends, the management is of the view that they are witnessing gradual pickup in the demand from the early June in the replacement and the OEMs market as well. But there's lots more to talk about the company, because CEAT's CFO, Mr. Kumar Subbiah, joins today ET Now to share his view on the growth outlook for the company and what are the current demand trends in the industry and how he is seeing the growth for the company. Firstly, talking about the current demand trends. So he is of the view that the April and May sales declined really badly because of the second COVID wave. But in the month of June, they are witnessing really good recovery, and the June month has been normal month for them with respect to its comparison from the pre-COVID levels. And going ahead in the month of July, he is holding an optimistic view. Along with this, on the different segments that the company is into, so they are particularly into three segments. Firstly is the OEM segment, where he shares that the revenue declined 30% on the quarter-on-quarter basis, but July has been a better month as compared to the June month, and possibly he's of the view that the course of the running quarter, this quarter itself, the OEM should recover well. The aftermarket or the replacement segments looks like a normal month, where they are witnessing that the sales is back to the pre-COVID levels. It's very close to the pre-pandemic levels. And the third segment for them is the exports, where it continues to grow even more. The truck segment, coming to that as well, that contributes to around 30% of the revenue for the CEAT. The truck segment declined 20% in this quarter, and this is still seeing weakness as of them. They are not seeing increase in the demand, but going ahead, due to the more infra push, that could lead to demands in the coming months as well. Now, talking about the current capacity utilization, he shares that due to the plant operations were not happening in the month of May and also in the early June, that impacted their capacity utilization. But going ahead, if the demand recovers well and the third COVID wave doesn't occur soon, then their capacity utilization could be at 80%. They ambition to increase their truck and the bus segment market share, and they hope to increase it from current 8.5%, and going forward they aim it to reach to 11 to 12% in the short term itself. So CEAT is optimistic on increasing their market share, but do watch out for the margins, because the commodity price inflation has been hitting the margins for the company. So going ahead, we will be watching out CEAT on both of these things.